we are well above that 200-day simple moving average. We've also moved now into overbought territory. So while we see 1.1035 as a longer term upside target, traders might be looking to find long entry in a pullback from overbought territory, looking at one of our levels of support to do so. The first level of such being 1.0720. Looking at cable, pound versus the dollar, obviously relevant to today's interest rate decision and policy statement to follow. We've had this break out of this falling wedge type formation. It's a short-term bullish pattern. We are still trading above that 200-day simple moving average. You could argue that in the short to medium term that we are in a bit more of a range-bound price environment between levels 1.1850 and resistance at 1.2440. But there is certainly a bit of a short-term move higher, but we're also now in overbought territory. Still prefer keeping a long bias to trades while we're firmly above that 200-day simple moving average. A preference there again, looking for long entry, any type of pullback from overbought territory. We can look at this 1.2160 as an initial level. If we were to pull back further than that, we could still consider 1.2125 as the next level of support where we'd consider long entry. And obviously, we just want to see that price ticking back around one of those levels before targeting our levels higher, 1.2258, 1.2440. Moving away from currencies and to looking at some indices now. Starting off with the NASDAQ 100, US Tech 100. It's labeled on the IG platform. Recently, we talked about this 250-day simple moving average, our green line, trading above that 200-day simple moving average, our blue line. And that's what we call the golden cross, suggestive of a long-term bullish bias for markets. That is turning out to be true right now. NASDAQ is an outperforming sector US index this year after being an underperforming index last year. And we've had a nice little move higher. We've tested our resistance at 12,900 and we have found resistance. We see a bit of a spike there and a bit of a pullback since. We are looking for a reversal closer towards trend line support for long entry, or alternatively a close above resistance, 12,900 for long entry, in which case we'll be targeting 13,190 as the next level on the upside. Only if we have a deep pullback and a close below this major low here, 11,665, then we start changing our bias to trades on the NASDAQ 100. But for now, we are looking at our different possible long entry points being a pullback towards one of our support levels or a break of resistance. The S&P 500, we do have a bit more of a range-bound environment, underperforming the NASDAQ this year so far. Previously, we talked about the short-term consolidation. We had a breakout, we had a sharp move higher, did fall short of our 4,080 target, and has found resistance last night and does seem to be pulling back a little bit. These two candles here do make a bit of a bearish engulfing. I think it's a suggestion that we could have a bit more of a pullback to 3,920, possibly even 3,855. I think if you are looking for long entry, you want to see a price breaking above this trend line resistance here, this red trend line. Alternatively, a bit of a bullish at one of these lower support levels, probably 3,855 would be a preferential level rather than the one that's so close at 3,920. Moving over to Europe now and looking at the NASDAQ, well, we've had a bit of a correction. And we have seen that 20 crossing below that 50-day simple moving average. Just a suggestion of that short to medium term correction of what is still considered a longer term uptrend. The price is trading firmly above that 200-day simple moving average. We've had a bit of a rebound here. That rebound is stalled with this red candle here. So the type of a harami or dark cloud cover, something similar there. What we'd like to see for long entry is a move above that previous day's high, a close above that. Sitting about 15,230 before targeting 15,715. Alternatively, this bit of a bearish reversal here does play out and we see weakness. We're looking for a bullish reversal at one of our lower support levels for long entry. This 14,605 did prove to be a level where buyers did come back into the market. And you look at this big candle here, or this long lower wick candle showing some price rejection at the low. So definitely a point of accumulation sitting there at about 14,600, 14,605 odd. So we would be, in the event of a pullback, looking towards that level again and hopefully for a reversal around there to find long entry once again. FTSE 100 was outperforming for quite some time, and then we've had this sharp correction. It's taking us all the way back to 7,285. We also have one of those long wick hammer type formations, this candle here with that long lower wick, which dipped below there and got sharply brought back up to close at the session highs rather than the lows. And from there, we're seeing this bit of a rebound from oversold territory, which has started to falter at this point in time. So this is a point where we are getting interested on the long side again. If we do see the price there, expecting that to act as a level of support, do want to see some sign that the price is ticking back up. We have now broken below that 200-day simple moving average. Doesn't mean that we're in a downtrend. Well, now we're back above, but it does suggest that maybe we've moved from an uptrend into a bit more of a sideways range-bound or consolidatory type environment, in which case we are trading off level. So in that situation, looking for a bullish reversal off this lower level of support for 7,285. Or if we rally up, we saw a bearish reversal at that 7,700. We'd consider short entry from that point as well. Moving over to some commodities now, and starting off with Brent crude. Brent crude has started to commence with a rebound from oversold territory. We fell just short of that longer-term downside target we had there, about 69.50 odd. But there is still a rebound that is in play right now. If we zoom in on our charts a little bit, you can see that next level of resistance sitting at about 79.50 odd, and above that, you could look at this range between 87.70 and 88.70. Now, we are not looking at getting long into the rebound from oversold territory because of that longer-term downtrend, which we do believe that is in place. So our preference here is to wait for a rebound to end with any type of bearish type reversal closer to one of our levels, 79.50 being that first one we would consider that for short entry, and then having that 69.50 level as a longer term downside target if we do get that reversal before 79.50. Gold has been trading well into positive territory. We've kept that long bias to trades on gold. It has served us well. We've seen a short-term resumption of that trend aligning with that longer-term uptrend that is in place. We've traded to new short-term highs, and we've had a bit of a pullback. That pullback does now look to have ended with a bullish Harami type pattern or piercing line, which just got the circled blue there. So a shallow pullback, and now we're seeing gains being extended. I think that is a entry point or entry signal. If you're looking to buy the first pullback from each new high, which is one of my favorite approaches to trading. So we've had that, we had a pullback. I think the first obvious target there on the upside does come to that $2,010 per ounce mark. Traders who are long could look at this reversal low, 1935 as a possible stop loss for the trade, or if they want to be really shrewd, 1,960 being a stop. Although that doesn't allow too much breathing room for gold, but that we need to assess our risks relative to reward on each trade. Last but not least, copper, leading indicator of economic health. Dr. Copper trend has been up, and we've had this what's turned out to be a bit of a pullback, bit of a falling wedge type formation that is considered bullish in technical analysis terms. When we look at that pattern, we've had a strong aggressive move up, and that's been followed by a slow cumbersome move down. So our red lines here just mark that consolidation or that slow move down, and the suggestion is that momentum is still to the upside. Now, for confirmation, we'd like to see a firm break above this resistance of that before targeting a move back up to about $9,220 per metric ton, and then possibly even $9,400 per metric ton on that. So we're watching that quite closely to see if we do get that breakout on copper. And obviously, if you're not trading copper, worth looking at the underlying shares that do derive a lot of their revenue and earnings from copper, the likes of BHP Billiton, BHP Group now, Glencore, South 32, and a whole host of others. Right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa. Do watch out for this afternoon's weekly unemployment claims out of the US, and before that, the UK interest rate decision.